Welcome back to the channel. Let's talk about social finance, also known as SOFI. Now, many people say that this is hands down one of the best, if not the best, upcoming fintech company that will transform the way we do things moving forward, replacing the traditional bank. So in this video, let's dive right in to find out if that's true or not, how SOFI stands in terms of valuation, and finally understanding the risk in buying SOFI. But before you get into that, it will help a lot if you hit the like button and subscribe to my channel. Now, the narrative behind SOFI business model revolves around being a one-stop solution provider, providing you all the financial needs from loans to insurance to borrow, save, spend, and investing all in one mobile app, making it really unique compared to the rest. To simply put it, the three main business segments that generate revenue for SOFI are lending, financial services, and digital banking. The opportunity for SOFI remains very attractive. Think of it this way, in our world today, at least half of the consumers are using more than one bank, and 80% of those consumers are doing so because of inadequate service. And this is where SOFI comes in. It reduces all the clunkiness and prevents you from the hassle of creating multiple financial accounts. SOFI is designed in such a way to create a financial services productivity loop, meaning that the ultimate goal is to create a lifetime relationship and then selling people more and more financial product to its members. This essentially makes it not only harder for users to leave SOFI platform, but also makes the business highly scalable, which is, by the way, the most important factor in all businesses. Okay, with that said, it is not only the sticky platform that makes SOFI highly appealing. It's Galileo financial technology acquisition, which serve fintech giants such as Chime and Robinhood, offers software APIs for digital payments and digital banking facilitation. Galileo is growing at a rapid pace and had over 70 million accounts at the end of Q1, seeing a huge increase of 130% year over year. SOFI is led by Anthony Noto. He has built solid leadership experience in Twitter, Goldman Sachs, and the NFL, making him the most suitable person for this job. Since taking over, SOFI has seen a rapid increase of 110% year over year to 2.2 million members. That's an increase of 430,000 members, making it one of the fastest grower in the fintech space. Connecting the dot with SOFI's product and leadership, for that reason, I believe SOFI is a very disruptive financial company. I think they have a serious chance of being the next Square in my portfolio. To much of my surprise, I view the short-term dip as an opportunity to load up more at a discounted price. This dip is due to two significant reasons. SOFI just had the lockup expiration on June 28. Lockup period is defined as a window of time when investors are not allowed to redeem or sell shares of a particular investment for a specific period. Long story short, lockup expiration are traditionally bad news for investors, as large shareholders are finally allowed to offload shares and take profit on their initial investment, creating short-term pressure. Reason number two is inflation and Delta variant noise. This changes completely the way growth stocks like SOFI are trading. If you trace back since pre-pandemic, inflation is the only one for which investors' outlook has not improved. I believe this remains a serious concern, but from my research, the CPI print shows that a third of the increase is used car prices, which makes inflation sound misleading. Plus, the Fed views this inflation as being temporary, which makes it sound more assuring to know. Going by the business model, management team, and the recent dip makes this stock a very attractive stock to invest in right now. But ultimately, forward valuation must be the deciding factor on whether you should invest in SOFI or not. Comparable established fintech companies are PayPal and Square. SOFI is currently trading at $15 at around 15 times sales multiple. Interestingly, quite similar to PayPal, the higher the sales multiple, the more are expected in terms of future revenue growth. Taking revenue growth of 43% as claimed, which by the way at this point sounds very plausible, and if SOFI generate $980 million revenue in 2021 as claimed and remains at $15 by the end of this year, that will bring the sales multiple to just 8.5 times. By the end of 2025, with the financial projection expected at $3.6 billion revenue, at which price do you think SOFI will be at? it is very evident. So as long as SOFI can bring accordingly based on the 43% CAGR, I think you guys will be rewarded massively. Overall, SOFI is one of the rare opportunities that you may not be able to find elsewhere in the fintech space. Again, what makes SOFI really stands out for me is the potential to change how traditional banks work. From the way I see it, SOFI offers one of the most well-rounded platforms that makes it not only convenient and sticky to use, but most importantly, they have highly differentiated business models from PayPal or Square. With that, I'm more bullish than ever in SOFI. Well, that's all I have for this video. Remember to hit the thumbs up button and subscribe to my channel for more videos like this. Till next time.